You can work on a lot of different things that are never going to pay you, but it keeps you busy. No one's ever going to care about your career as much as you do. It's important, I think, to continue to evolve your career. So I made it a point that I wouldn't stay in the same role for more than 5 years. Doubling down on something that's not working because you're emotionally attached to it is never the right move. The flow business, it's an IT business, and you need to spend a lot of money to do that.
How do you take that step ultimately to be more entrepreneurial sort of aspect in now ultimately, controlling more of your own destiny directly?
For one, you need some...
Private markets investments are investors can find some real value. I find the best way to learn is learn from someone who's done it before and given it a go. Hi, I'm Travis Miller, host of Grow Your Wealth podcast. Thanks for joining me here today. On these podcast sessions, we're going to talk through how certain investors have navigated the bumpy road of investing, whether it be through business or investments in general. Thanks for listening today. Welcome to another episode of the Grow Your Wealth podcast, where we explore the strategies and stories of financial success. I'm your host, Travis Miller, and today we have a very special guest, Gary Head, a seasoned finance executive whose impressive career spanned more than 30 years across global investment markets. Gary's journey began on the bustling floor of the London Stock Exchange, navigating the complex world of equities at just 20 years old. Gary's deep-rooted relationships and strategic acumen propelled him to significant leadership roles, including global head of cash equities at UBS. More recently, Gary has been a linchpin in strategic advisory work in Gresham, MST, and Avoca Funds Management. Today, Gary will share his wealth of experience and discuss the evolving landscape of global markets, strategic decision-making, and practical insights for both seasoned investors and newcomers alike. Let's dive in and learn how to grow our wealth with the expertise of a true market veteran. Thanks for coming in, Gary.
My pleasure.
How we start at the beginning? And do you want to just give us a potted summary of who you are, what you're currently focused on from a business perspective?
Yep. Okay. Well, thanks for that introduction. That was a pretty good potted summary. I've been in markets all my life.
Yep.
Mainly equity markets, and my career has been lucky enough to take me all over the world. I started off in Melbourne, went to London after I got my degree. The first thing I did was I jumped on a plane, went to London.
Gotcha.
Came back to, after spending a couple of years in London, came back to Melbourne, then Sydney, then London, then Sydney, then London, Sydney again.
Gotcha.
So it's been a fantastic journey, and what I love about it is every day is different, and that's the best thing about financial markets. It's a constant set of puzzles, a bit of stress, to keep you sharp, but it's constantly evolving, which is what I love about it.
Gotcha. Very good. And we crossed paths, I don't know how long it is. You run out of years these days, but I'm sure it must have been at least 10 years ago at our days at UBS. Yeah. It's good to see your business Avoca, how it's sort of taking steps forward. But do you want to take us through your education? A lot of our listeners like to understand the backstory of how you got where you are today. Do you want to take us through your days in Melbourne?
Sure. Okay. Some of my friends that are a lot smarter than me would say that, and these are doctors and lawyers and highly specialised people, would say that, and even surgeons would say that 80% of what you learn on the job, which means that by definition, you don't actually have to do a degree if you want to be able to practice theoretically.
Sure.
I think that's about right. So from a formal education and an informal education perspective, my formal education was a degree at Monash University in a Bachelor of Business. And then within my informal education, it's important, I think, to continue to evolve your career. So I made it a point that I wouldn't stay in the same role for more than 5 years.
Gotcha.
So no one's ever going to care about your career as much as you do, which means you need to manage it that way.
Yep.
So every 5 years, I change my role, change my geography, change my client base, change my product specialist to a point that I kept evolving my education that way from a professional perspective.
Yep.
I did also to help sharpen the saw, in 2013, I went and did the advanced management practice course at Harvard, which is a 2-month intensive MBA light course, which was a tremendous experience, immersing you into a network of learning and experiences. And that network, we're still very close today, 160 of us, and we still communicate almost daily on a WhatsApp group.
That's interesting.
It's a fantastic group of people that you can share thoughts and bounce ideas off, and they give you incredibly honest and brutal feedback.
Gotcha.
Which is a great way to get some feedback from people outside your daily routine.
Gotcha. I'm not surprised you built that network, because I know your career and roles have been sort of like relationship driven, about networks and connections.
Yep.
Do you want to just touch on sort of networks, even from, I'm sure you've got contacts back when you're back in Melbourne, and how important that's been for you across the journey?
Networks and connections and relationships in business are phenomenal. I mean, everybody in business is in sales. It doesn't matter what you do, you're in sales. You can think you're the most specialist person writing algorithms in a dark room. It doesn't matter. You're still in sales. You need to communicate with people as to what that algorithm needs to do and how it's performing, for example.
Yep.
Right through to trying to structure a transaction or trying to execute a transaction. I was incredibly lucky to have joined Potter Partners really early in my career, which became through a series of mergers, UBS.
Yep.
So I was with UBS for 32 years and across those different regions, and which I mentioned to you. And as a result of that, people like you, for example, the network is just amazing. The number of people that I meet in business all over the place, that alumni, is phenomenal.
Yeah. It's amazing, valuable, isn't it? If you want to get a connection, it tends to be, particularly in Australia, it's typically one phone call away. Can you introduce me to this person?
It is. I've got 3 kids that are young adults that have recently gone into professional careers, and my strong advice to each of them was to get your first job's probably never going to be your last.
For sure.
But if you can get your first job with a brand name and a network, the connections that will give you through life is fantastic.
Yeah, so I have a look back at one of my first jobs was a grad job at ANZ, and a lot of people I still know from those days, and having ANZ on the CV was amazingly powerful. I mean, on that front, across that, you mentioned 32 years. What's changed across that period of time, you think, in, say, financial markets?
Well, an incredible amount. And there's just so much has changed and continues to change. Just to pick something out of the air, private equity's only been around for, really been around for 25 years. Really. There were some family offices doing it.
Yeah.
But in terms of an asset class you can invest in, it's incredibly new. Markets were much more liquid than they are now. You've seen a consolidation of equity markets into the US and into passive products.
Yep.
And there's good reason for that. And you've also seen an enormous growth in the private credit markets as well. As a percentage of GDP, private credit has gone from 60% of GDP in the US to 200%, and in Australia 60 to about 100%.
Yeah, it's huge.
And if you look at that compared to the growth in equity markets, it's far outpaced it.
Yep.
And if you look at what's been happening to banks and how they're being regulated on capital, which is only going one way, and the consolidation of banks, I can only see that requirement to outsource capital to private markets going up.
For sure.
And so you're seeing these firms like the giants, like Apollo and Blackstone, are the kings of financial markets now, and they didn't exist when I started my career.
Yeah. Hey, if you're enjoying this, please subscribe on whatever platform you're using. It helps us build a community. We want to educate investors, and this is what it's all about. It's amazing. It's interesting to think about your evoker at the moment, your background, public markets, equities. I think it's an awesome background when you start thinking about private market equity, right? Because you got to understand both sides of it, and they've got characteristics that are similar. But I guess the private markets, you've got a little bit more control. You've got to dig into more detail because it's not public, just by the nature of it. So I can understand how you've taken that step.
Well, the other thing about public markets in equities, you've got, or when I started off on the floor of the London Stock Exchange, it was voice broking and I was a market maker.
Yep.
That's what high frequency trading is now.
Yeah.
It's the same thing.
Yeah, for sure.
Except it's gone from 10 or 20% of volumes to upwards of 50, 60% of volumes.
Yeah.
So real liquidity doesn't exist in the market as it does now, and you're now seeing incredible investing via ETFs and index products.
Yep.
The Apollo CEO gave a presentation of the recent results, and for those really interested to see what's happening to market dynamics, that's definitely worth a read. His presentation, and he runs through the big four factors which have driven the change to markets over the last 20 years, and he's highlighted the big four which are going to drive the next 20 years.
Gotcha.
And one of them is what's happening to equity markets, where 60% of investing is index related, ETF related. It makes it very difficult for active managers to outperform. Only 94% of active managers underperformed over the last 15 years, which means by definition it's easier to pick stocks than it is to pick managers.
Yeah, for sure.
And so what attracts me to private markets is if you can pick the right business, you can structure your way into an embedded edge.
For sure. Agree.
And you can generate a risk-adjusted 25, 30% IRR in a way that would compare to a 10 to 12 in listed equity markets.
Yep.
You're giving up liquidity, but I would swap, locking in 25% unlisted for 4 years and trying to punt 10 to 12 in a liquid market over the same period.
Yeah, agree. I mean, it's a huge opportunity set, and as you say, giving up liquidity, it's not the end of the world, right? Because if you don't need your money next week, a week later, a month later, a year later, and you can target those higher returns, it becomes an interesting trade.
Yeah, it does. It does. But I think you're also saying that the market. I think that there's two types of sort of private assets. One is sort of yielding, cash flow backed.
Yep.
And one is sort of high growth moonshots.
Yeah.
It's very difficult to raise money for high growth moonshots now.
For sure.
And I think it will continue to be for a while.
Yep.
We're starting to see some of these transactions being done at the edge, but the cash flow backed, investing at 20% free cash flow yields, those deals are out there.
For sure.
And that is where the opportunity is set.
Totally agree. I think I love about it is the control. The benefit of that private market, you can ring up the CEO, the COO, and get access to information in the public markets you don't get, and the influence you can make across the journey is material, and you're spot on in that space of looking at those sort of companies maybe 3, 4, 5 years into their journey. They're getting into positive profitability. They've got genuine revenue, genuine business model, and they just need a little bit more equity to take them to that next step, or a bit of equity to acquisition or sort of bolt on something. It's a very, very interesting space. And at the valuations at the moment, makes it even more interesting. I guess I agree with where you're focusing because it makes total sense at the moment.
Yeah, it's very enticing, and we all make the mistakes, and to look at business models and buy the dream. But you don't necessarily need to always take those risks. You can always wait to see whether a business gets properly established But more importantly, before you make the investment, but more importantly, how well the management's performing and how focused they are.
Yep.
Because in this space, look, that's what you're largely investing in.
Yep.
Because in the public market space, the market's more efficient in removing those types of people.
Yeah, for sure. Now, a little bit of the personal stuff now. Back to who the top 3 people have influenced you the most in, it could be early life, business, and why?
Okay. Okay.
I've dropped that one on you.
No, that's okay. I got it. I'll start off from an investing one.
Yep.
You know, Warren Buffett.
Yeah, for sure.
You think he's had it, you think he's passe, but he's right.
Yeah, his conference is on at the moment, isn't it?
Just always comes back to, he's right, his discipline. It's a good discipline. It's the Bible for most investors, and you keep going back to it, even when you sometimes lose a religion.
Yeah.
That's an obvious one.
Yep.
I'm going to say a friend of my father's was probably the smartest guy I ever met in my life.
Gotcha.
He wrote the original code for Computershare.
Wow.
He was a deeply flawed man.
Yep.
Very smart, but on the spectrum, but with everything that goes with that. Very bad family life. Gotcha. Terrible father, terrible husband.
Gotcha.
But incredibly bright, and just had this ability to just turn his hand to a difficult problem and apply himself to it. He became, after he retired, he became a lawyer and a barrister just for the hell of it. He then got motor neurone disease, so did a medical degree so he could understand that more as well. So people like that are pretty interesting just to watch.
Yep.
And then the third one I think is actually my father.
Yep.
Just because you could sort of see as an adult the trials and tribulations that they go through, and how they dealt with it. And as you go through life and start to go through them yourself, I give him very high marks for how he did that.
That's interesting. So he did know something, is what you're saying.
Yes, he did.
Parents do know something.
Yep.
Yeah, that's true. Interesting that point too, impressed about the Computershare. I remember back in the UBS days when they were looking at technology solutions, you got heavily involved in looking at that aspect of it. So arguably that's a pretty early mover because they're looking at the platform effectively for smaller investors to buy equities via a platform to get exposure to UBS research and UBS execution.
Yeah.
So it's interesting. Do you think you're an early mover there?
Yeah. It's look, if you want to understand what your super skill is, what your superpower is, and mine was strategy in big business, and I could see that happening. I sat on a global board within UBS, and that gave me a very good. It was like jumping a time capsule. You go overseas, you spend time in Hong Kong and London and New York, and you see what's happening there, and you compare it to Australia. You can pretty clearly see what's going to happen in your market. So I got a massive assist there, but execution was going from voice to electronic, and we really did embrace that, and I changed my role to do that. But if you look at it now, execution it's an IT business at big firms, at the big firms. The flow business, it's an IT business, and you need to spend a lot of money to do that. And the edge within the business gets moved around. It's not necessarily on the commissions in broking.
Yeah.
The big edge in broking equities now is in prime broking.
Yeah. Sure.
It's in financing. It's in other
the funding
things.
Side of things are great.
The funding side. That's where you make your money, not necessarily over the execution side.
Yep.
So there's still money there, but it does move around.
Hey guys, I hope you're enjoying this episode. If you want to learn more about alternative assets, there's a book here you can read, How You Grow Your Wealth with Alternative Assets. Now back to the episode. A couple of pivotal moments in your career. Sounds like you've been back and forth to Sydney and London multiple times in your career. Was there a couple of pivotal moments that led you to where you are now?
When I did that course at Harvard,
yeah, for sure.
They sort of say a few things, and I was managing quite a big business before I did it, and people sort of asked, why are you doing a management course when you're managing? And the answer was I wanted to put some theory behind the practice, which is sort of a bit like the cart before the horse.
Yep.
But they'd say things in the class and do things in the class that you go, oh, that makes sense. It's the penny's dropped. And you're sitting there with 160 people that are kind of just below CEO level, sort of being groomed for CEOs of their businesses.
Yep.
And one of the things they said in one of the classes was, pull out a piece of paper and write a note to the person that had a big impact in your career, gave you a big step up, that you wouldn't be here but for them.
Yeah, wow.
And everybody pulled out a piece of paper, and no one had to think about it.
Yeah, wow.
They immediately did that. And mine was actually Mark Steinert,
Gotcha.
head of equities, UBS, which became CEO at Stockland. And I was on the desk and sort of stuck in a bit of a rut and doing my thing, doing it well, but as a specialist producer, and to make that jump to a manager, he was instrumental and supportive in that, and a fantastic boss.
Gotcha. That's good. Because that was so you went. I remember you were head of equities at UBS Australia, but then you took another leap, right, to the global role. Yeah.
Yeah, global cash head of equities. Yeah. So that was, talk about change. There was 900 people, 950 people when I took that role over, 650 when I left it 4 years later.
Yeah.
And I don't know what it is now, but it'll be less.
Yeah.
And that was just managing a series of consolidation and efficiency.
Yeah.
But what a fantastic experience it was. Having meetings and working with some of the best people. I mean, the UBS people culturally, if there's a better culture, I don't know what it is. It was and still is full of a bunch of fantastic people.
For sure. Now, what you're up to today? So, do you want to? Can we have a bit of a chat about your current business? Why is this? What's driving it?
Yeah. Okay. So when I got back from London, I spent some time with Gresham and another bunch of fantastic people, culturally very similar to actually UBS, and started off doing something, but repivoted into helping them grow out their funds business. So we grew out private equity fund, which is there with a good manager there, Moritz, really smart guy. We did a resource royalty fund, which was a cracking investment, got bought by Regal and still doing very well there. A couple of really good guys, and started off sort of a fund distribution business for other funds, so like a fund distribution business. But when that was sort of done, it was sort of done. So I wanted to sort of do something else, and they didn't really need me there beyond that. So the alumni of MST is ex-UBS people, a lot of ex-UBS people run by Gerard. Great organisation. He's done a tremendous business getting that up and doing what it does. And ended up doing micro cap ECM there, which was great, but I didn't really want to do that. So I spoke to Gerard and we're trying to work out what the next thing is for the next period of time. And it wasn't micro cap ECM. And so the flip side of every problem is there's an opportunity. And what I did see at MST was that within the micro cap space, liquidity is very tough.
Yeah.
And getting tougher. It's a question as to whether it's structural or cyclical.
Yep.
I think it's largely structural for the reasons I've mentioned. There's just not the same number of small cap managers out there.
That's true.
Look, good companies will always find capital.
Yep.
But the flip side of the problem is the opportunity is to some of these companies still require capital to grow. Those ones you're talking about, they've got a proven product, a proven market, a proven customer base.
Yep.
And there's a big thematic with baby boomers retiring and selling businesses.
Yep.
There's a lot of opportunities out there. You just got to find the right ones, and then once you find the opportunity, matching that with capital. So that's very much where I'm focused. So I'm working with a some people out of Melbourne that M&A partners who have been doing this for a long time in terms of advising on sale of businesses. But there's a bunch of businesses that are too big for private families to buy or too small for private equity to buy, and that's the niche we're focused on.
Yep, makes sense.
But we can structure a 25% plus IRR, and you can dividend recap your way out of any problems. So in other words, they all generate very strong free cash flows.
Gotcha.
And we've been doing that for the last few months, very close to hopefully closing our first transaction with another couple close behind it.
Sounds good. I mean, interesting on that front, a lot of listeners, ask some of these questions, is you've gone from a stable work environment, probably getting paid a nice salary and enjoying bonuses, most of the time. How do you take that step ultimately to be a more entrepreneurial sort of aspect in now ultimately, controlling more of your own destiny directly? What's some tips to take that step? Or even thoughts or tips?
I think, for one, you need some capital behind you.
Yep.
It depends on how much risk you want to take as to how much capital you need. I think you need to have a good network that can support you in the transactions and everything to do with that, so front to back.
Yeah.
And I mean, our relationship, for example, I've syndicated a couple of transactions on your platform, and I will continue to do so. That's a good example of a network that helps you in the transactions. And I think you want to have a very clear vision on what you want to do and how you're going to do it. The don'ts, don't get sidetracked, and don't be busily ineffective.
Yeah, gotcha.
You can work on a lot of different things that are never going to pay you, but it keeps you busy, and that's what you're going to be careful about.
Yeah. I remember an old colleague at Steve Boxall, who we both worked with.
Yeah,
one of his classic statements was around everyone can look busy. It's hard to actually do something.
So true.
It's very, very true.
It is very true.
So you mentioned bumps in the road. Like across the journey, what are some bumps that sort of impacted you on the way through?
Look, from a personal perspective, working in London was awesome. It was the best job I could possibly ever get. But my family was in Sydney.
Yeah, tough.
So living away from my family for 4 years was very difficult, and sort of got to the point where that had to come to a conclusion.
Yep.
That was sort of from a personal perspective. I think from a financial perspective, they say that if you can get 55% of your stock calls right, you're good.
Yeah.
You're very good. And then the performance all comes around your risk management, so your bet size, and how you manage the drawdowns.
Yeah.
And I think that is so true. It is so true. And having the wrong size bet to the wrong stocks is I'd like to go back in a time machine and address that. I think that's probably that's one. The other one's outsourcing your brain to other people on something you should know better.
Yeah.
So when you can make up your own mind about a situation and you've got the capabilities to do it, but you meet someone that's you think intoxicatingly smart, you can tend to outsource your brain and your thinking to them.
Yeah.
And they may think, left, and you may think right, but you're heavily influenced to go left. And then you sort of go down the track and you say, well, that was just the wrong decision. Why did I do that? I knew better.
Yeah.
So I think there's a lot of, it's not only, quote Warren Buffett, he said, it's not intelligence necessarily that makes a good investor. It's a lot of common sense. It's true. Yeah. It's managing your emotions. And there is a lot of, there are 150 IQ idiots out there that are a lot smarter than you and present better than you, and you don't listen to them if you know better.
Hey, if you're enjoying this, please leave a review. It's really important to us. We're trying to build momentum around education, and better reviews will get more people coming and listening. You know, it's a very valid point there. The bet size, like how much you invest on a trade, is so critical. A mate of mine, Justin Harsell, who works at iPartners, recommended a book, Missing Billionaires. And one of their key points is just that, right? It's not necessarily about the bet you make, it's the size of the bet, because you'll get some wrong. You've just got to have the capital to be put another bet on, another trade on. Because if you put too much into one, you might not be able to keep going.
Yeah.
It's so important.
Yeah, and doubling down on something that's not working because you're emotionally attached to it is never the right move. I mean, if you and I were complete twins in every possible way, right?
Yep.
And we started off and we went on our own investment careers with the same amount of capital,
Yep.
and we got together after 10 years, the person that's going to make the most money is going to be the best risk manager.
Yeah, for sure. Yeah,
And I think that, if you look at what's happening in markets at the moment, and I mentioned before, it's hard for active managers because of what's happening to the beta of the markets. Mentioned Apollo's quote that 94% of active managers have underperformed over the last 15 years. Have a look at who's outperforming, right? It's all the people with really good risk managers.
Yeah.
It's Citadel.
Yeah, gotcha.
It's Millennium. It's all those people. And they've actually, a lot of those places have risk managers, Rex, UBS,
Yeah, gotcha.
globally.
Yeah, interesting.
And it's all the guys that ran risk
Yeah.
are running risk at those places, and that's why they're outperforming. It's just manage your downside and let the upside.
Yeah,
Pick the talent for the upside, but manage your downside. And I think if I was an active manager right now, I'd be, and the smarter ones they're changing their strategies for the current environment. I'd be looking at my risk policies.
Yeah, it's interesting. A lot of people, they look at the concept of return. There's other thing called risk, right? Risk and return. So I totally get it, right? And particularly in the, maybe in some of the individual investors, mums and dads, often you'll see the return and think, gee, that's a big number. That looks pretty attractive, and they'll trade on the basis of the number.
Yeah.
You really need to look at sort of your return relative to the risk.
Yeah.
How many risk units are you taking for potential return? And it's critical. And that's how those institutional investors think. They've got smarter models and more complex analysis. But at the end of the day, how much risk are you taking for a given amount of expected return? And it's critical analysis.
Yeah.
I've been jumping back and forward, career, personal. So what is your definition of success and how are you achieving it? And that can be both personal, professional life, and all combined.
I'll give you a quote. I'll give you a quote. Elon Musk, right?
Heard of him?
Said the other day that the definition of happiness is expectation minus reality.
Gotcha. Make it positive.
Right?
Yeah.
And I think that's pretty good.
Yeah, it's not too bad.
Right?
Yeah.
It's a nice simple formula. It's expectation minus reality.
Pretty good, actually. The more you think about it.
So you got to think about your reality and think, well, how does that compare to my expectation? And if that's out of whack, then you better work on your reality.
Yeah, you got to increase your expectation.
Yeah, so I think
change either.
Yeah, so that's why I think that you've got to do. Look, at some stage, in your whatever you do, you've got to be, in your career, you've got to work out what your superpower is and leverage it.
Gotcha.
For some people, that's working in big organisations. For some people, that doesn't satisfy them.
Yep.
That's going to be a massive driver. Some people are happy to work for a salary. Some people want to build something.
Yeah.
You've always got to work within your own set of parameters. But usually, some people sort of come to a point where they want to build something. That's what you're doing. And you've done a fantastic job, really fantastic job in building a really difficult, a really difficult thing. And then sort of strategically segmenting into those two different business units is smart. Platform and product. You might not call it that, but I'll call it that.
Yeah, for sure. Yep.
And it's that's doing what you want to do and being satisfied with it.
Sure. I mean, that's why these discussions exist. Is iPartners is passionate about education, and they, our investors want to understand alternative assets, understand who's involved in the market, and listen to experts who've been there before. So, part of the reason why we're chatting. So appreciate that.
Yeah.
Now, from a legacy perspective, what do you think of the legacy you're living and leaving?
Legacy. Well, spent a lot of time, I spent most of my career at UBS seeing them continue to do well.
Yep.
Is fantastic. I'm sure you feel the same way.
Yeah, for sure.
There was a lot of competition. They got picked over very heavily by some competitors post some changes to the market dynamics, but I had no doubt that they were going to bounce very quickly, given who they are. I think that's great, and I think with the Voca funds trying to build the next one.
Good.
Yep. I think that's my focus is on creating something which creates incredible value for investors and nice solution for companies.
Yeah, and I can see what you're trying to achieve, because I think about your background. You've got a good network and great relationships with people potentially looking to source capital.
Yeah.
And then so I think you can analyse the trade quite well, and then you've probably got good connections with people looking to deploy capital.
Yeah.
So your role's effectively sitting in the middle to ensure when an investor comes through that you've done a lot of the thinking for them ultimately, and probably across the duration, to make sure you're knocking on the door of whoever you gave the capital to, making sure they're doing what they told you you're going to do, doing the constant DD and chasing them up. So
probably sitting on the board.
And for sure, right? Yeah, so that's a control piece, right?
Yeah.
If you either on the board or have the right to go on the board, just having that ability to influence really turns the dial for investors.
Yeah.
And I'm sure, for example, your capital's probably getting investors alongside your investors about the alignment, which is something I always talk about when investors. You need to sit there and go, where is the alignment? Are they going to be there when things go wrong?
Yeah,
very good.
No, I definitely. I wouldn't do anything that I wouldn't invest in myself.
For sure, which is good. We're getting to the back end of that quick fire questions, and this one can go back to as young as you want to go. But what was your first job ever?
Milkman.
That's pretty good. Wandering the streets of Melbourne.
On a horse-drawn milk.
Serious?
Yeah.
That's pretty good. Did you get free milk?
Yep.
Oh, perfect. Seems like a good job. What's a piece of advice for your younger self?
Think for yourself.
Think for yourself? Yeah, perfect. What motivates you most as a person?
Performing up to my own expectations.
Perfect. What are your tips for driving long-term wealth?
Be patient, manage your emotions.
Perfect. What's the biggest mistake you see people make when it comes to building wealth, and why? Which could be the contra to what you said, but
it is. It's getting rich quick. Trying to get rich quick doesn't happen. Getting rich slow.
Yeah, for sure. Requires patience. Comes back to that point before about the size of your bet.
Yeah.
Takes time. Yeah. When you're not working, how do you like to spend your time?
Well, my job is my hobby. I read a lot of finance books.
Gotcha.
But sport, a lot of sport, golf, and I'm trying to, on my to-do list, which I never get to, but I'm going to try to do it this year, is I'm trying to learn how to kite surf.
That's pretty good. I've seen it, and I thought I might leave that to others. It's very good. Now, from Melbourne, obviously AFL, what's your team?
Melbourne.
Oh, gotcha.
Melbourne.
Yeah, so Blue Blood Melbourne.
Yep.
Perfect. Thanks again, Gary. If you're interested in connecting with Gary, you can connect with him on LinkedIn. We'll include the link in the show's notes, but really appreciate you coming in, Gary. It's been a great chat.
Oh, fantastic. Thanks very much for having me.
Thank
Cheers,
you.
Travis.
Hey, if you're enjoying this, please leave a review. It's really important to us. We're trying to build momentum around education, and better reviews will get more people coming and listening.